Okay, so we are doing the leases, and this is the question that we have. So the machine costs the lesser 100,000. 80% of it is financed by debt, remaining by equity. Cost of debt and equity is given to be 20% and 16%. Now, this is a fallacy here. There is a fallacy here. The fallacy is that they have given the cost of debt to be higher than cost of equity, which is normally not the case. It is the cost of equity which is generally higher than cost of debt. So that's a fallacy in the problem, but that's okay. We'll go with what the problem says. Lesser is in the 35% tax bracket. The rate of depreciation for machinery is 20% according to WDV. Scrap value of the machine is 10,000. And the fifth year, we have to ignore taxes on profits. Estimated cost of maintenance, general administration is 1,000 a year. Lessee agrees to pay the following: annual rent 36,000, 5 years. Payment to be made end of each year. Security deposit 3,000, which is refundable at the end of the lease period without interest. Management fee is non-refundable, payable at inception of the lease period 2,500, which will be treated as revenue income. Now, what is the first thing that I would do? I would first create a depreciation schedule. So what is the depreciation schedule here? So start with the year. How many years is this project? So this project is for 5 years. And what is the opening balance of the machine? It will be 1 lakh. First year depreciation would be 20%. And the closing balance of the asset would be 80. This 80 becomes the opening for the next year. Again, you have 20%. This is WDV method, so it will be on written down value. This will again become 64, and this will continue till the end of the 5th year. So this is how your asset schedule should look like. Clear? Now, इसमें ये वाला जो portion है, this one, depreciation, this will go to your P&L. Correct? So we'll start with the estimation of the cash flows. So सबसे पहले you have your operating expenses. What is the operating let's look at it one by one. You have depreciation. See, depreciation is not a cash flow. Depreciation is a non-cash expense, but depreciation will go to the P&L. So it will reduce the profit and therefore reduce your tax liability. So you will have to find out the tax saved on depreciation because it goes to your P&L. So whatever is your depreciation multiplied by your tax rate is 35%. This will be your depreciation annual. Okay. So I am marking this as green. Why am I marking it as green? Because this is any saving is a plus and any expense is a minus. Now, next is what? Yes, scrap value of the machine is 10,000 at the end of the year. Now, you have to ignore the capital taxes. So at the end of the 5th year, I'm going to write 10,000 rupees as the salvage value. This will also be green because this is what you will get. Uske baad, estimated cost 1,000. So this is your salvage value. Then you come to the general G&A expense. Obviously, this will be net of taxes. So 1,000 will go into the P&L as your cash flow, but it's also going to save you 35% of tax, isn't it? 1000 रुपए P&L में जाएंगे हर साल, और हर साल 35% बचेगा. So every year you have a net cash flow of 650. Will this be red or green? Red, because this is an expense. सैलरी वाली जो मिलती है ना, जब आप बेचते हो एसेट तो पैसा मिलता है, सो ग्रीन है. एक्सपेंसेस टैक्स नहीं होगा, इट विल सेव टैक्स. Any expense which goes to P&L. So if I have, let's say I have profits before expenses of 5,000 minus expenses of 1,000. So profit before tax becomes 4,000. इसके ऊपर tax saved, tax will be 35%, 1,400. अगर ये 1,000 नहीं होता, what would have been the tax on 5,000? 35% is 1,750. So are you not saving 350? So 350 is 1,000 into 35%. So you are spending 1,000 but saving 350. So your net expense is 650. So that's your G&A expense. Next is what? You also get an annual rent of 36,000. Now, the way expenses will save tax, incomes will have a tax liability associated. So you have a annual rent क्या? 1,000 is going to your P&L and 350 is a tax saved because it reduces your profit by 1,000. 35%. So 350 tax saved. So net cost 651. नहीं समझे? Okay. So this is the profit before expense. 5,000 before SG&A expense. अगर SG&A expense 1,000 है. So profit before tax comes down to, इसके ऊपर 35% tax is 1,400. Now suppose ये expense नहीं होता, if this G&A expense would not have been there, I would have paid tax on 5,000. 5,000 के ऊपर tax कितना बनता है? 1,750. So how much is the, because of this expense, how much is the tax saved? And how much is your expense? So what's your net cash expense? Cash expense will be your expense minus the tax saved on it. Because any expense which goes to your P&L will save tax.
So this administration cost will be bear by them, or
No, it depends on the contractual term. So in this case, they have assumed that the lessor is going to bear it. You can have maintenance borne by the lessor. होता है ऐसा. और कौन सा है ही नहीं ना कॉस्ट, अलग अलग कॉस्ट है. यू कांट डू इट. रेंटल कितना है आपका? 36,000 है. अब रेंटल इज एन इनकम, इनकम के ऊपर आपको टैक्स लगता है. सो नेट ऑफ टैक्स विल बी 36,000 into 1 minus 35%. है कि नहीं? Because income will be net of tax. So this will again be a red. No, this will be a green, sorry. Because this is an income. Right? और क्या है? आपका डिपॉजिट का रिफंड होता है. How much is the deposit refund at the end of the 5th year? 3,000. वो भी ग्रीन होगा. क्यों ग्रीन होगा ये? No, ये रेड होगा, sorry. Because this is the deposit which took in the beginning from the lessee and now we are returning it back to the lessee. इस पे कोई टैक्स इम्पैक्ट आएगा डिपॉजिट रिफंड पे? नहीं, because this is not an income. It's just a capital receipt and payment. So इस पे कुछ भी नहीं आएगा. Yeah, it's not mentioned, so we can ignore that.
So, but that 3,000 amount in the first year.
हाँ वो add करेंगे. That when we do the initial investment, we'll add it. Correct. So what's your? We will now prepare our initial schedule. So initial investment, initial cost of the asset is how much? Initial cost of the asset is 1 lakh minus you got the deposit, security deposit. How much was it? वो minus होगा because that's an inflow. And also you got 2,500 as management fees, but that's an income. So इस पे tax लगेगा. Correct. So minus your management fees of 2500 into 1 minus 35%. So ये हो गया आपका management fees. So these are your costs. So your net outlay in the beginning would be your initial cost minus your deposit minus the management fees, which is net of tax. So 95,375. So यहाँ पे आपको ये देखना है कि डिपॉजिट पे मैंने टैक्स नहीं लगाया, लेकिन मैनेजमेंट फीस पे लगाया, बिकॉज डिपॉजिट इज नॉट टैक्सेबल, दैट जस्ट अ लायबिलिटी, बट इनकम मैनेजमेंट फीस इज अ रेवेन्यू, so that will be taxable. So you have to take net of tax. Huh? That is every month, every year's rent के ऊपर 35% टैक्स लगेगा ना, so net लेना. So this will give you your net cash flows for every year. All greens will be added and all reds would be reduced. तो ये आपके cash flows हो गए. Now these are all cash flows which are there in the future. So you'll have to bring these cash flows to the present, जिसके लिए आपको क्या निकालना पड़ेगा? Weighted average cost of capital निकालना पड़ेगा. So यहाँ पे मेरा weighted average cost of capital क्या है? Debt है और equity है. Debt is 80%, no? 80%. So this is 0.8 and equity is 0.2. Cost of debt will be 20% into, correct, because it will save tax again. It's an expense. Correct. And cost of equity क्या है? दिया हुआ है 16%. So you can find out your weighted average cost of capital, which will be 0.8 into 13% plus 0.2 into 16%, which becomes 13.6%. Now you will use this discount rate to discount your cash flows to the present. So you have to find out your discounting factors, ताकि discounting factor जब अपने future cash flows पे आप लगाओगे तो present values आपकी कम हो जाएंगी. So you can get your discounting factors 1 by 1 plus R raised to the power of n. ठीक है, ये हो गया आपका discounting factor. Now multiply your cash flows with the discounting factors to get your present values. And उसके बाद आपको क्या करना है? Simply add करना है. That's it. So what do you get? Summation of this will give you your total cash inflows, which is 99,784. So what will be your NPV? NPV will be your total cash inflow present value minus the cash outflow ka present value, which is 4409. Now that's a positive. And how do you calculate IRR here? For IRR, what you do na? Just take these cash flows. इसको यहाँ नीचे कहीं paste कर दो. And similarly, uppers, you just have to add the cash outlay. That's it. So you can get your IRR is equal to IRR and just take these cash flows. That's all. And you will get your IRR, which is 15.49%. पहला वाला नेगेटिव क्यों रखा है मैंने? Because वो outflow. So outflows are always negative and inflows are always positive. So यहाँ पे आप देखो NPV is greater than 0, which means this is a viable arrangement. It's a value adding project. Even your IRR is much higher than the cost of capital. So when your IRR is greater than your cost of capital and your NPV is positive, then it means that this is a value additive project. So we should accept it. Okay. So this combines both. It combines for you the lease also, and you get a perspective of time value of money also incorporated. So that is lease. Thank you. Yes.